While you sleep, an invisible army is fighting over the value of your currency. Right now, as you watch this frame, hundreds of thousands of autonomous mathematical entities are buying, selling, and liquidating positions across the global foreign exchange market. They do not drink coffee. They do not check their emotions. They execute trades in fractions of a millisecond. For decades, this infrastructure was locked inside the obsidian towers of Wall Street. But today, the doors have been breached. A wave of retail software, known globally as Forex robots, promises to hand that weapon to anyone with an internet connection and a few $100s. It sounds like the ultimate financial cheat code, a machine that harvests wealth while you live your life. But behind the glossy review sites and the automated profit dashboards lies a far darker, hyper-predatory ecosystem. An environment where the lines between financial freedom and systematic liquidation are entirely blurred. Go to any online forum or financial platform today, and you will find an endless parade of reviews ranking the best Forex robots of the year. They sport names that sound like military operations or advanced artificial intelligences. They showcase flawless backtests, graphs moving perfectly from the bottom left to the top right with zero hiccups. To the untrained eye, it looks like a solved equation. If the machine can read the data and execute the strategy perfectly, why shouldn't it win? But if these algorithms are so incredibly effective, why does the data show that over 90% of retail traders still lose everything? The answer doesn't lie in what these robots are doing right. It lies in a systemic blind spot engineered into the very fabric of automated retail software. A flaw that transforms your passive income engine into an institutional liquidity trap. To understand the future of automated trading, we have to look past the marketing and examine the naked architecture of an expert advisor, or EA. Stripped of its branding, a Forex robot is simply a script running on a terminal like MetaTrader. It relies on technical indicators, relative strength index, moving averages, or Bollinger Bands. According to specialized reports on automated systems, retail robots operate on pre-programmed rigid logic. If condition A matches condition B, execute trade C. This is called deterministic automation. In a stable, predictable market, these systems can generate stunning short-term streaks. They look flawless because they are optimized for past data. But the foreign exchange market is not a stable machine. It is a chaotic, non-linear psychological war zone, driven by shifting geopolitical tensions, flash liquidity crises, and unpredictable human panic. When a black swan event occurs, a static retail robot doesn't adapt. It continues executing its pre-programmed script all the way into absolute zero. But here is the twist that the review sites never tell you. The real danger isn't that your robot might fail. The real danger is that it is designed to be hunted. As discussed in deep dive architectural analyses of modern financial structures, institutional market makers possess massive multi-million-dollar machine learning systems that map retail order flow in real time. Because retail Forex robots rely on highly standardized public technical indicators, their behavior is completely predictable. The institutional algorithms know exactly where your robot will place its stop loss. They know precisely at what price point thousands of automated retail systems will panic sell. With surgical precision, these institutional black boxes trigger localized price spikes, wiping out retail automated positions in a split second before moving the market back to equilibrium. Your automated tool hasn't freed you from the market. It has simply turned your capital into highly predictable food for the largest financial entities on Earth. This isn't just a story about individual losses. It is a macroeconomic shift. Trillions of dollars flow through the foreign exchange market every single day, dictating the cost of imports, the stability of national debts, and the purchasing power of your bank account. As retail automation scales globally, it creates a phenomenon known as algorithmic synchronization. When thousands of identical, unthinking bots react to the exact same market signal simultaneously, they exacerbate market volatility. They turn mild currency corrections into catastrophic flash crashes. We are moving into an era where national currencies are no longer valued merely by the health of their economies, but by the mechanical feedback loops of competing automated networks. The global financial system is quietly transitioning from human-managed policy to automated grid warfare. So where does this leave us? The future of automated trading is completely detaching from the classic indicator-based retail robots you see reviewed online. The next generation of automated systems relies on neural networks and deep reinforcement learning. These systems don't follow static if-then rules. They adapt dynamically to live data, rewriting their own parameters in real time as market conditions shift. But this technological evolution creates an unsurmountable chasm. The computing power required to train and run true adaptive AI models costs millions of dollars. This means that while retail traders are still buying outdated static scripts based on 40-year-old technical indicators, institutions are deploying cognitive systems capable of predicting human and mechanical behavior blocks in advance. The future of trading isn't a level playing field. It is a knife fight against a supercomputer. The dream sold by automated trading reviews is beautiful. Absolute financial liberation without the human burden of labor or anxiety. But true financial mastery cannot be packaged into a template file and bought for $99. The market is an open reflection of human greed, fear, and survival. To think an unthinking script can safely navigate that storm without constant, intelligent adaptation is the ultimate modern illusion. Technology can amplify our strategic capabilities, but it can never completely replace the critical edge of human judgment and deep contextual understanding. Now you know. Decode Daily.